Bitcoin outstanding at roughly 19.5, 19.6 million Bitcoin. And 15 million of those are in the hands of what we call strong hands. They're in weak. They're not weak hands. They're strong hands. They haven't moved their Bitcoin in roughly half a year, and we can monitor this. So 15 out of the 19 and a half, and the number of Bitcoin ever that will be created is 21 million units. So again, I think you're going to start to see scarcity value playing a big role here.
The introduction of spot Bitcoin ETFs in the United States is expected to unlock unprecedented opportunities for both institutional and retail investors, offering a more accessible and regulated avenue for participating in the burgeoning Bitcoin market. Industry analysts predict that the approval of these ETFs will catalyze a surge in institutional capital inflow into Bitcoin, potentially fueling Bitcoin's value to new all-time highs and solidifying its position as a legitimate asset class. The exact launch date of the ETFs is expected today, Thursday, January 11th. Investors and Bitcoin enthusiasts alike are eagerly anticipating the ETF's debut on major stock exchanges, anticipating their impact on market dynamics and investor sentiment. ARK Invest CEO Cathie Wood, one of the companies who received the ETF approval, shares her excitement on the milestone. She points out that this is a starting point of something greater than Bitcoin itself. She is very bullish on what is going on and is optimistic that the SEC will remain cooperative. Let us now join her in the video. As you watch, don't forget to like, subscribe, and drop your comments below.
The price has moved up. It's been an anticipatory move, I think. Many people have been saying there's going to be a sell on the news. This is up too far, too fast. And that very well could be, but I don't think it's going to last very long because this is the SEC's green light. And there have been institutions waiting on the sidelines. They were not going to move until the SEC blessed this. And we've had a lot of our clients and the gatekeepers were not going to allow Bitcoin, even what we did own, GBTC, they would not allow in portfolios until the SEC blessed it. So I do think this is a big moment, and I do think that the flows are going to help us demonstrate that there's real scarcity value here. Because you've got Bitcoin outstanding at roughly 19.5, 19.6 million Bitcoin. And 15 million of those are in the hands of what we call strong hands. They're not weak hands, they're strong hands. They haven't moved their Bitcoin in roughly half a year, and we can monitor this. So 15 out of the 19 and a half, and the number of Bitcoin ever that will be created is 21 million units. So again, I think you're going to start to see scarcity value playing a big role here. A lot of retail holders did not want to go through the friction-filled process, or they were discouraged from it, to get a wallet and figure out custody and all of that. This is going to simplify all of that. It's easy access. And I think a lot of people are waiting for easy access. The early adopters are there, no question about it. And yet we believe this is an asset class that will scale to billions of users. I think in the United States, there are 50 million. I don't know. I think the estimates for around the world, 100, 200 million. We think this is an asset that it is the financial superhighway that the internet finally is accommodating. When developers built out the internet in the early 90s, they did not put in this layer because no one ever thought that financial services or commerce would take place on the internet. It was just a place to exchange information. And even in the 80s, it was illegal for consumers to use the internet. So we were coming from there. And now, of course, we do all kinds of things on the internet. This is going to simplify, take out a lot of middlemen that are there really to control risk, but also they take a toll. This is much more of a peer-to-peer network. So we think there are going to ultimately be billions of users on this network.
The SEC's decision signifies a significant shift in regulatory stance towards embracing Bitcoin, signaling increased acceptance and recognition of it within the traditional financial realm. This approval is expected to pave the way for future developments in Bitcoin-related investment products, potentially opening doors for a more diversified range of Bitcoin-based financial instruments for investors. As the SEC finalizes preparations for the listing of the first spot Bitcoin ETFs, market participants are on the edge of their seats, awaiting a new era in the investment landscape shaped by the integration of Bitcoin into mainstream portfolios. Cathie Wood shares her views on how she hints the ETF approval will affect investors. Let's hear what she has to say.
One of the most important proof points for Bitcoin happened in 2023. Whereas before, most investors thought it was a risk-on asset. It would do well in strong markets. They never thought it would do well in crisis-prone markets. And of course, in 2022, there was all kinds of crisis, and it didn't do well. But what happened during the regional bank meltdown in March of last year? The regional bank index, the KRE, was imploding. Silicon Valley Bank, Signature, Republic, other banks went bankrupt. Bitcoin went up almost, well, I think it went up 40%, right in the middle. What did that tell us? It tells us we have not only a risk-on asset here, but we also have a risk-off asset. And that spoke volumes to us. In fact, we got converts. Now, leaders of financial institutions call it a flight to quality. We would say a flight to safety. And why do we say that? There's no counterparty risk, unlike in the banking system. The counterparty risk is what caused the 08-09 financial meltdown. Fear of counterparty risk, once again, caused the regional bank crisis. With this fully decentralized, transparent network, there isn't counterparty risk. So we are now saying Bitcoin is not only a hedge against inflation, given its scarcity value, but it is a hedge against deflation, given the lack of counterparty risk. The value of Bitcoin, the first global, digital, decentralized, rules-based monetary system in history, that is a very big idea. When we did our research, our first white paper in 2015, could Bitcoin serve the three roles of money? We invited Art Laffer to collaborate with us. He is a famous economist. You probably know him for the Laffer curve. He's also a monetary scholar. His mentor was Robert Mundell, who won a Nobel Prize for monetary theory. And when he finally figured out what this Bitcoin was, he said to me, I've been waiting for this since they closed the gold window in 1971. A rules-based monetary system. Monetary policy is unhinged right now. This is a rules-based monetary system. I said, wow, that sounds like a very big idea. Remember, this is 2015 when Bitcoin is $250. How big of an idea is this, Art? Well, how big is the monetary base? At that time, it was $4.5 trillion. Now it's $7.7 trillion. This is a very big idea. Right now, Bitcoin's market cap or network value is a little over 800 billion. We think it has miles to go. The scarcity value of institutions pushing in, now that there really only are going to be 1.5 more million Bitcoin minted ever, is going to be quite provocative.
Veteran trader Peter Brandt believes the expected approval of spot Bitcoin exchange-traded funds, ETF, to be a classic buy the rumor, sell the news event. Brandt explained that this conclusion is based in part on how the so-called Bitcoin maximalists are eagerly awaiting the approval of spot Bitcoin ETFs and his years of experience as a pro trader. In traditional stock trading, the phrase buy the rumor, sell the news refers to a trading strategy that involves buying a security based on speculation about an upcoming event and selling it when the event is announced. Some observers believe the U.S. Securities and Exchange Commission's SEC much anticipated approval of spot Bitcoin ETFs qualifies as such an event. In a post on X, Brandt discusses two observations he has made. He points out the irony of Bitcoin maximalists being unfazed by what would amount to the government's influence or interference with crypto markets. Bitcoin maximalists have viewed one of the predominant values of Bitcoin as that it was outside the control of government, that it was not dominated by the same financial playground that has ruined so many things. So, how is it that so many Bitcoiners view the SEC and ETFs as the savior of their financial future? Brandt quipped. Regarding the ETF hype that has propelled Bitcoin to its highest USD value in nearly 2 years, Brandt likens this current scenario to a guide commonly used by old-time career traders like himself. According to this guide, when the average person is itching to get in, that is usually a signal to old-timers that it is time to get out. However, the veteran trader still acknowledges that his observations about Bitcoin ETFs could be wrong. Brandt, who has clashed with Bitcoin maximalists in the past, also asks those smarter than him to share their thoughts on the subject. Responding to Brandt's post on X, social media user Abel Chris said he disagreed with the veteran trader's assertions. According to Chris, if the SEC approves 10 or more spot Bitcoin ETFs, the direction of the crypto asset's price will be up. He added, "We may never see Bitcoin at the current prices again. The next phase will be countries adopting Bitcoin to back up their currency." Another user, Christian Pelushi, implied that Brandt's assertions about ETFs only apply to the average European or American kid. For Bitcoins from other parts of the world, the ETF approvals are a non-event. They are only interested in the fact that thanks to Bitcoin, they have access to a parallel financial system, which protects their savings from the devaluation of local fiat currencies, Pelushi said. Do you agree with Peter Brandt's take on this? Let us know in the comment section below. Also, don't forget to like, subscribe, and turn on notifications. Thanks for watching.
Hey Savvy Finance enthusiasts, massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform, Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers.